Good morning, everybody. Happy Wednesday, May 31st. So good to see you all here. Getting a little bit of a pullback in the markets as we're seeing them move lower, and currently all of the equity indexes are an outside day to the downside. That's going to be part of the trading tip of the day as far as how do we splice into potentially a longer running move to the downside. So trading tip of the day, all the equity index futures are currently an outside day to the downside. Look for those pullbacks into our sell zones. Those are going to be those corrective moves back to the upside, and then also those short breakout trade opportunities to splice into this downward move. So if you look at the equity indexes, we do have some pockets of points to the downside. I want to emphasize that with our breakout trade opportunity over here. Looking at the NASDAQ, if you go to the 1 hour, even the 15-minute to get more detail, looking for that way to splice into potentially a longer running move to the downside. Taking that breakout trade short is going to be below 14,294, right below where we're starting to get those three touches to the downside. I'd say with this one, just keep an eye on those areas where we do have some of those speed bumps that we've talked about in previous classes, anticipating there may be some unfilled orders. And we could get a bounce off those areas. So we'll take a look at that and how we can incorporate that into our breakout trades. The grid has also been updated. So again, as the equity indexes are pulling back, we've started to form some new sell zones on the NASDAQ and the Dow. As far as our buy zones, for the most part, our buy zones were a little bit further away. I believe Russell or the Dow is currently in our buy zone. Hopefully some of you guys took advantage of that. I believe it hit in the overnight session. But yeah, a couple new sell zones as we are pulling back, and as some buy zones have been tested. Currently, these ones may be a little bit lower. What's in the news more on the bearish side as we are seeing the markets pull back? Taking a look at Market Watch, US stock futures slip after disappointing China data as debt ceiling vote looms. Coming over to Yahoo Finance, stock futures fall with all eyes on debt ceiling vote. So again, the equity indexes are pulling back, outside day to the downside. The news is correlating with what we're seeing in the markets currently. So overall, as we start our session, a little bit more on the bearish side. Economic reports are going to bring that volatility into the market. So we need to be prepared, especially with several Fed chairmen speaking. We do have one that started speaking at 8:50 a.m. Eastern time. So we'll see how that is potentially impacting the markets. And then later today, we'll have 12:20 p.m. and 1:30 p.m. Eastern time, two other Fed chairmen speaking. During our live trading room session, two other key economic reports coming out. That's going to be at 9:45, that quarter hour, and the 10 o'clock reversal time. We'll have Chicago PMI and JOLTS coming out during those times. So very important today to keep an eye on the quarter hours as well as the 10 o'clock reversal time. And then again, of course, that breakout trade opportunity short on NASDAQ is looking for those areas where we have at least three touches of support to take the breakout trade. And then if we are taking that, using the leg base to manage our risk. All right, we have our other prep screen as well. Jeff just mentioned in the chat that copper has triggered. It looks like for that short breakout trade to the downside below 3.6226. So again, if you are taking that breakout trade short, using the leg base to manage your risk, using that group of candles just prior to that breakout move. A couple other areas we're looking to keep an eye on for some more of those breakout trade opportunities or pullbacks into our buy zones or sell zones within our sell territories. And then we'll recap at the end, go over open, buy and sell zones. So you have these moving forward. If the markets do continue to move lower, likely we'll be continuing to form new sell territories, and our buy territories may start to become a little bit further away. All right, jumping over to, again, just back to the pre-market routine. I was taking a look at the trend this morning, key odds enhancer, because as the markets are pulling back, we want to see if there is some buying coming in. Currently, the trend is still pretty low at 0.57 in the pre-market. So you guys know trend is low, time to go. We're really not seeing a lot of institutional buying coming in at this point. If we were, the trend would start to be pushing higher, ideally above 1.5 or 2. So again, this is telling us that we're seeing a little bit of a pullback. It's outside day to the downside. News is bearish, and with the trend being low, we may see that move continue a little bit further to the downside. And then just taking a step back out, again, our Mastering the Charts event, we've been mentioning this, but it is coming up soon, June 10th, 11th, and 12th, 9 a.m. to 4 p.m. Eastern time. That does include 1 month of the Mastering the Charts recap and review sessions, as well as all content and recordings. So if you haven't registered yet, I'm going to post that link in the chat for you guys. And then if you have any questions, feel free, as always, to email us. Alrighty. Market Watch, Yahoo Finance, no surprise there. We come over and we're seeing some more bearishness coming into play. Let's see. Start with Yahoo Finance. Main article here is stock futures fall with all eyes on debt ceiling. Vote, China's market misery is piling up everywhere in sight. So really a lot of bearish news coming into play that is correlating with the markets, again, being an outside day. So we're just starting to put all these pieces together. Econo Day, again, economic reports coming out. Susan Collins started speaking at 8:50 a.m. Eastern time, so about 15 minutes ago. Moving forward, we'll have Chicago PMI and JOLTS coming up during our session, some other key economic reports to keep an eye on. Got something to share, Jeff?
Yeah, I just want to share my screen in just a moment. What we posted in the chat earlier, talking about crude oil, the open range breakout, took the breakout to the upside, 67.34. Stop loss, nice little play, and it looks like we're about ready to do a little breakout, coming back up into a light volume pullback on crude oil. Natural gas also triggered. I took a late entry as price had that little base, dropped down into the zone, and got that little breakout there. And currently watching Russell using the prep screen zone. Am I going too fast?
You're good. I'm following.
Okay. The prep screen zone that was from yesterday, price tested it in the overnight session. And this morning when I started doing my prep work, it was right there again. So I went ahead and jumped in on that, catching that move back up to the potentially up to that gap fill. We'll see if price opens up inside or outside the prior day's trading range. And of course, keep very close eye on copper, have that one set up, looking for a breakdown, nice pocket of points, and we'll see how that plays out. Okay. I'll be back on in a few minutes after Caitlin gets done with our prep work. Just wanted to check.
On that copper breakout trade, are you using that opposing zone at 3.59 for your target price?
Yes.
Okay, perfect.
Maybe just a tad sooner, right about that 3.6048. I'll watch how it triggers that old resistance. We've seen a lot of that recently. It's just the support and resistance has been places to take a quick profit, and then zones are a place to start taking a trade. So, all right, everybody, back to Miss Kate.
Excellent. Thanks, Jeff. Great trades there. So hopefully some of you guys got it. If you did, post in the chat for us. You know, Jeff posts those prep screens out ahead of time in the Discord group. So hopefully you guys took advantage of some of those. So we already did economic reports. Oh, and then just later in our session, if you do, or after our session, if you do want to keep an eye on some of those Fed chairmen speaking, 12:20 and 1:30, we'll have 3 Fed chairmen speaking, and then Beige Book is going to be coming out at 2 p.m. Eastern time. Trend, one more check, still very low, 0.6 in the pre-market. So again, trend is low, time to go. We're really not seeing a lot of buying coming in as the markets are moving to the downside. Coming over to the charts now, crude oil, big move to the downside. This was from our prep screen yesterday for that short breakout trade opportunity. We marked our support area, got that breakout trade to the downside. So at this point, if you guys didn't participate in that short breakout trade, now it's about waiting for that pullback that corrective move back up into our sell zone. Within our sell territory, we go over all of this and how to do it precisely step by step in mastering the charts, but being able to identify where do we have the 3 touches of support, drawing your sell territory, mapping out those touches to visualize the pivot points, and then ultimately gauging, did we make a higher high or a lower high prior to the breakout to gain better incentive as far as where we're looking for those unfilled orders. So 20-minute sell zone on crude oil, looking for that pullback. This one also was formed on very high volume during yesterday's session as we had that big move to the downside. So keep an eye on that one, 71.34 for the entry. Stop at 72.07. If that's too much risk, you can always go down to the smaller time frames, turn it down minute by minute to see if you can reduce the size of that zone. But overall trend on oil is continuing to the downside. Could be significant buying just below, but overall looking for the trend to continue and finding ways to splice into that. All right, let's start with S&P. So as mentioned, all of the equity indexes are outside day to the downside. So we're looking for ways to participate short, pullbacks into sell zones or breakout trades to the downside. Dropping it down to the hourly time frame. So we've already started making our way into that pocket of points to the left-hand side. So potentially looking for that longer running move down to our 8-minute opposing zone at 4166.5. Looks like we're just getting a bounce again. Prices has already drifted into that pocket of points, so may need to go down to the smaller time frames to find the 3 touches to then take the breakout trade to the downside. Was a little cautious. I was looking for a sell zone up here, but keep in mind, looks like price has already tested this resistance once, twice, which means looking for a sell zone up there in the context of a higher time frame uptrend is going to be a little bit more elevated risk. So if you are taking short trades, just manage your risk closely, as when we step back, we can see the trend on the S&P has been more to the upside. So potentially a longer running move, pull back into our 8-minute buy zone, 4166.5. Stop at 4155.25. Let's see, let's take a look at the Dow 30 stocks. Currently, we have 1, 2, 3 Dow stocks down over 94 cents, and we have 1 up over 94 cents. So 3 down, 1 up is going to be a net of -2 times 2 is -4. So cash is -4. Futures are trading at -19. Are futures overbought or oversold relative to the cash market? Cash is -4. Futures are trading at -19. Awesome. Thanks, Liz. Good job, Jeff. Yeah, oversold by about, it looks like 13 to 14 points. Oversold. So again, if we are oversold relative to the cash market, we are looking for futures to rally up to balance out with the cash market. So potentially seeing a little bit of a pullback rally once the market opens, but going back to the trend, we're still not seeing a significant amount of buying in the pre-market. So we may see a bounce back to the upside, but I'm not sure if it's going to be sustained, as we also have that pocket of points to the downside. Coming over to the NASDAQ. So outside day to the downside, we broke the prior session's low. This is an area where I'm looking for that short breakout trade into that pocket of points. You can see there's potentially a longer running move coming into play, as there isn't a whole lot in the way. Let's drop it down to the 15-minute time frame just to see this a little bit more clearly. All right, so to the left, here's where we had that basing. Price came down, tested once, twice, 3. We're right in it at that 4th test here. So once all those buy orders have been used up, looking for that short breakout trade to the downside. It's going to be below that support, below 14,294. That's going to be the one from our prep screen. So breakout trade short below 14,294. Find your leg base group of candles first to manage your risk. And then I mentioned before, just be cautious of speed bumps. So when I look a little bit lower, you'll notice how price did rally during, looks like Friday's session when we were having that big move to the upside. We did form this little basing area where price rallied, based sideways, and then continued to move higher. So that breakout trade short, we may be running into that speed bump there. So just be cautious of that, expecting more volatility. If you do want to wait for the breakout below that speed bump, then below that, we do have a longer running pocket of points to the downside. Just keep that in mind when you are taking breakout trades. Look for those speed bumps and incorporate that into your trade plan. Keep an eye on the stocks: Apple, Tesla, Microsoft, Google, Meta, Amazon. You want to see what they're doing. If they're all continuing to move lower, then that's going to be an odds enhancer for the NASDAQ futures market as well. Oh, and then 2-minute sell zone. I did find one right at the origin or pretty close to the origin of that move to the downside from yesterday. 2-minute time frame, high volume zone, 14,516.5. Stop at 14,559.75. So we have a sell zone. We have a pending sell territory once we break below the support, and then be aware of that speed bump around 14,250. Let's see, Russell also outside day to the downside as we broke the prior session's low. Did anyone participate in our 6-minute buy zone that we had from our prep screen and recap screen? Oh, yeah, price didn't transition to an outside day, dropped right into our 6-minute buy zone. Let's take a look at that. I think this is the one that Jeff was in as well, but price dropped in during the overnight session. We had a second test here just previously and getting a bounce off of that 6-minute buy zone. So keep an eye on that. We'll see if this move can be sustained to the upside, but overall, again, outside day to the downside. That's where we look for more of those short trade opportunities. Russell overall has been pretty sideways for the past several weeks now. So a lot of these orders have been filled up in this area. You just be cautious with your zones on the Russell. Nearest sell zone that I have that's fresh is going to be up at 1808. Stop at 1810.8. See, lastly, the Dow. And price rallied up into our 20-minute sell zone. That was in our sell territory. It did break the prior session's low just by a little bit, so it is an outside day to the downside. Coming down to the 1 hour. As the Dow comes lower, keep an eye on the quarter hour, the 10 o'clock reversal. We are starting to approach this buy territory that was previously formed. So 3 touches of resistance. We have our buy territory, 8-minute high volume zone within our buy territory, looking for a drop into that 32,853. Stop at 32,789. Again, keep an eye on this zone. If we are going to be taking a long trade, which is going to be more counter trend as the Dow has been pushing lower, we want to use odds enhancers like IBM, Goldman Sachs. We'd want to see them moving to the upside, as well as price dropping into this 8-minute buy zone on the quarter hour or 10 o'clock reversal. We'll keep an eye on that one as well. Indexes, as we've gone through, all pushing to the downside. S&P, NASDAQ, Dow, and Russell. Some of them getting a bounce though, a little as price has come down into those support areas and our buy zones. But overall, more downward momentum. Bonds were rallying and now are pushing to the downside as well. We want to monitor this and look for that inverse correlation between the two. Internals. So trend, we saw that that was low, still pretty low, 0.67, pushing a little higher, but still at that low point. We'll look at tick, advancing issues over declining issues as well. The VIX, pretty steady at 17, not significant amount of fear and volatility coming into play at this point. We do want to monitor this during our session. And then lastly, our pre-market indicator. We do have a gap down in the pre-market, so more down ticks and down volume, more bearish sentiment. Incorporating this with everything else that we've talked about in our pre-market routine. Pre-market indicator gapping down, that's going to be bearish. All four of the equity indexes are an outside day to the downside, which is also bearish. So keep that in mind, more to the downside as far as the market's pushing lower and being an outside day. The trend is also not showing signs of strength yet, as in the pre-market, we're still at that low point of 0.7. Just be cautious due to the fact that we are oversold relative to the cash market. We'll do that one more time. Currently, we have 1, 2, 3 Dow stocks down over 94 cents. One is up, so net those two is going to be -2 times 4 is -4. Futures trading at -19. Futures are oversold relative to the cash market, so anticipating a rally back up once the market opens. So it could be a rally back up into a sell zone. Keep an eye on those sell zones and those breakout trade opportunities to the downside to find ways to splice into potentially a longer running corrective move back to the downside. We covered a lot today. Jeff is in several trades right now, so I'm going to pass it back over to him to take a look at his setups for today. Thank you guys. Jeff, it's all yours.
All right. Yeah, we do have a couple of screens to share with you. First, the open range breakout on crude oil. Okay, price is running pretty good. I'm right about now ready to take my profit on this one here. So go ahead and I'm going to grab that one. Still has a little bit more to go, but man, that was a pretty good bounce back up, about 2/3 of the way back. And boom,
Order filled.
we're out of crude oil. The other one that's running is natural gas. Okay, natural gas came down to that area that back on May 4th area. Okay, natural gas does have a little bit of headwinds coming up as well. Looking right over to the origin of a strong drop. So we're looking for just another short-term target up to about 4.425. Okay, so I'm gonna place an order out there to sell that one. And currently in the Russell back to the upside here, just catching a bounce off of that prep screen zone. Okay, very important to see that, you know, when you start testing out the prep screen zones, is to take smaller profits until you get more comfortable with understanding where the zones are at. Because some of the zones are for taking profits and some are for taking trades. Okay, so you need to learn that process. I have just a couple of micros on here. I have a $50 price target. Actually, I'm going to remove that as we get closer to the open. If we open inside the prior day's trading range, then I'm going to look for that gap fill. Okay, which will be back up near the Globex high. And we'll see at that point if we build a little more resistance. And then we're looking for that pocket of points up there. From the other screens here, keep a close eye on gold. Gold has a great setup. And we've got that high tight base. Okay, so price hit once, twice, 3, 4, 5, 6. And often we get the breakout on number 7 going right into that dead space up there. Okay, so 7 point is the breakout, 18 sorry, 1983.5. Okay, make sure that you manage your risk on the trade. The dead space price should easily cut through that, and we're looking at an opposing zone back up at 2030.20 cents. Okay, so gold is already set up. Have the trade already out there, ready to get into it, and stop loss already prepared. Sometimes you got to set these orders up ahead of time. Okay. And what else did we have? Really keeping a close eye on wheat and soybeans and corn. This was just a massive drop, and it was very scheduled. Look at this: wave 1, 2, 3, 4, and 5. Okay. So there's a nice little controlled sell-off. Thanks, Al Gore, for or whoever it was. Yeah, was it Gore? Not Al Gore, but it was the other guy that came out talking about the emissions from soybeans and wheat and corn. How many years have we been told that plants produce oxygen? Now they produce CO2. Oh man, what else is going to change in this administration? Okay. Before I jump into all the equity indexes, we have one thing I'd like to share with you, and just indulge me for a moment. Where's your picture, Kate? Come back on here. There we
Thanks,
go.
Jeff.
Caitlin's birthday today, so everybody say happy birthday to Caitlin.
Thank you, Jeff. Appreciate that. Love the video.
There you go.
Thanks, everyone.
There we go. All right, happy birthday, Caitlin.
Thanks, Jeff. Thanks, everyone.
Had to get the red face, you know, everybody likes that.
Oh, yeah.
Anyways, great start this morning with some of our pre-market zones. We are more, I am a little bit more to the bearish side. We talked about the cash value, futures value. I did create another workspace to kind of monitor this a little bit more in trading the NQ. I went out and found basically the top largest market cap weighted stocks. And I got top 10 as far as Apple, Google, or basically Alphabet, NVIDIA, Tesla, AIG, Netflix, AVGO, which used to be Broadcom. Actually, that one should be Qualcomm, QCOM. Qualcomm has a bigger market cap. Okay. Now, we all know that futures follow the cash market. Okay. So as I'm starting to monitor these, you can change the time frame to whatever you like to monitor them on. Currently, I'm just kind of watching on a 15-minute chart. May drop this down for some intraday trading, looking at 3 or 5 minute chart just for those little momentum. All right, markets are, let's see, S&P right near the Globex low. And let's make sure we look a little further to the left-hand side. See, it's really important to understand what's over on the left-hand side of the chart. We just went through dead space. We got another dead space below. And we have a nice little pocket of points in the middle. Now, this is the first time I've really seen a pocket of points in between a couple of dead space areas. So we'll see how that one plays out. Could be a nice little move. We do have, as Caitlin pointed out in the prep screen here, is that we have several Fed chairmen speaking, okay? And we need to watch and see how they're commenting about the different debt ceilings and so on, see how that's going to play out. Not everybody's really bullish on all of that. All right, so Dow. Okay, also, let's see. Caitlin had a breakout trade on the NQ. We'll watch that real close. And then we also have the Dow, which has gotten several touches from yesterday's session, overnight session held, and we can look for potential breakout below that Globex low. Now, keep in mind, this is not really the bear trap scenario, because the overnight range is not equal or greater to 75% of the daily ATR. Okay, but several traders may choose to use that as a potential bear trap. Okay, we're right at the open. Price opened inside on that, so we're going to expect a gap fill sometime today on the Dow. On the S&P, price gapped outside, so we're looking at a gap and run potential on the S&P. Okay, so a little bigger runner. Okay, NQ. Uh-oh, what happened? There we go. Gap fill coming right up. All right, so I'm about ready to take a profit on this one right here at the gap fill. Right after the open. Actually, no, let's keep this going for a moment, because we do have that pocket of points right there. Nice. Beautiful. Okay, so I'm targeting right there about 1778. Is anybody else able to get into that?
Order filled.
I'll just grab that profit there. We did have trades on soybeans, so SN23. Oh, didn't quite get me. Dang it. How about wheat? WN23. Okay, wheat is back up at break even, so I am long wheat as well. And with wheat, I'm looking at that V-shaped reversal. Okay, and this one came down and hit the 224 extension. Okay, huge sell-off, very minimal risk at this point, but there's still risk on the trade. Okay, a lot of volatility. I'm looking for a strong move back up to about that 78.6% retracement. Once it gets underway, we'll look for something basically right up around that area if we get that bounce off that. Still could go lower, but this is one of those places that we do look for that V-shape reversal. Okay, and it looks like we're starting to get a little bit of a move now. We'll see if it follows through. Okay. Okay, so market's on fire here. Okay, so coming back out and kind of looking at how that first 15-minute candle, we're seeing a couple of stocks gapping down. Okay, now right now it's still kind of mixed, so you're going to start to see that when you're watching all of these, if it's mixed, it's going to be a little more elevated risk until things start taking hold. Okay, we're still in, no, we're out of crude oil. Okay, so crude did come back up. Not quite up to the 69.49, which is the resistance area. And I also want to point out that the three touches over here. So if you do get a breakout above that 69.79, it may be short-lived. Okay. And often when we do have that, what else should we get in? Oh, we still have nat gas hasn't quite hit our target yet. Okay. All right, gold's about ready to trigger. Okay, we're looking at the breakout. I also want to point out that keep an eye on the dead space. Okay, And we're looking for that break above, that's 1983. Now, this is a high tight base, okay, and the 7 touch is generally the breakout, okay. In order to project profit targets 1 and 2, we need to use a Fibonacci price extension. And we will look for the 127, 1618 extension as far as potential targets. Okay, so first potential target 1989 and 40 cents. Second potential target back up to 2000. And of course, we have the resistance area right across the top that we're going to be watching as well. So that one's just about ready to trigger.
Order filled.
Looks like it just did trigger. Okay. Oh, I didn't want to take 2 contracts. Just wanted 1. Let's get that breakout. Come on, move up. And I'll take 1 off. Okay, so target 1, target 2. Equity index is still on the weaker side. Remember the prep screen breakout trade potential on the NQ. Looks like S&P is about ready to break that Globex low. Wow, Goldman Sachs. Goldman Sachs on a larger time frame. I spent a little bit of time yesterday going through a lot of stocks. And some of the big banks, they look very, very weak. Wow. That's a whipsaw, isn't it? Okay, so this prep screen zone is gone. You should have seen the new prep screen zone. Okay. And that should be in play. And now that we have multiple touches of this area, let's just look over to the left. Not quite 3 touches to take the breakout yet. Okay, you might have, well, drop down to a 5-minute chart. Yeah, you could potentially look for that breakout below that. Okay. Right now we have other candidates, but we'll keep an eye on that one. Little choppy once it does break that, so we kind of have a mess, a big speed bump right there. So we'll watch that area. Okay. Back to the internals, VIX is a little bit up, but not very strong. We did have the trend pop up above 2. Okay, so we should be looking for that little up move coming here soon. We haven't gotten a sell program yet. Refresh that. And we can see that the equities are a little more on the bearish side at the moment. Holy smokes. Doing good on wheat. Anybody get on the wheat trade? Off that V-shaped reversal? Rally, rally, rally. Somebody tell me they got into wheat. No Wheaties for you, huh? Wheaties are good. All right, so we're looking for a 78.6% retracement. Hopefully we can stay through the whole thing. I don't know, the green looks good. Sometimes you just want to grab it. And that's okay. The V-shaped reversal puts us back up at 608 half, okay? Or 6/8. Okay. We've got a couple little speed bumps, little areas of congestion along the way. But we should have a nice little profit buffer on that, okay? Now, V-shaped reversals, I just I put a couple of things together and I started really looking at the price pattern for a V-shaped reversal. And I noticed that in my comments, what I wanted to find is when to expect those big V reversals. Okay. Now, if you're looking at the price chart right now, you'll see that the 3 touches that we have are over on the left and we have a low pivot. So the textbooks out there, you know, technical analysis of the futures market said the easiest way, and this is a quote, a direct quote, the easiest way to find a V-shaped reversal is after it is completed. I'm going, wait a minute. There's got to be some information ahead of this, okay? And often there is, when we have a V-shaped reversal, there's after a drop, we have the 3 touches over on the left, and we have a pivot on the low side, okay? So there's a specific place to start anticipating the V-shaped reversal. And we have several charts that are set up like that, okay? All right, so let's come back, check out gold. Whoa, nice. Oh, almost hit that target. Got to close that.
Order filled.
Sorry, that was too fast. But nice little breakout. Came really close to that target. Looks like you guys took some profits on that. Okay. Anybody get the gold trade? That just hit my feel good, so I just grabbed it and got out of the way. Nice job, trader Debbie. And crude oil now has lost a little momentum. Ooh, net gas. Have my stop in place. I was really hoping we'd hit that target up there. Okay, little move up on the NQ, ES. This is probably the move up that we're seeing is probably a result of watching our internals and seeing that spike up at the open, okay, above 2. Now remember, when the trend spikes up like that above 2 or below 60, you have about 15-20 minutes, and then you'll see the move in the equity indexes. Okay, so some of the move up we're seeing right now is happening as a result of the trend getting above 2, but now it is kind of backed off. So as we watch the equity indexes now, okay, we also want to anticipate that that momentum is going to be slowing down about 20 minutes into the session, which we have another right on the quarter hour. And we have about another 4 or 5 minutes of that momentum or that push up on the S&P, because price gapped outside the prior day's trading range. Okay, we're not expecting the gap fill, but a gap and run. Okay, so I want to find a supply zone and help myself get into that. So I'm going to drop down to a smaller time frame to where I can get the right picture. Okay, so I just went to a 3-minute chart. It was arbitrary. Okay, I'm expecting a pullback in the next 4 or 5 minutes. Okay, so I want price to intersect with the supply zone. So I have my price popped up, found buyers, found buyers, found buyers, no more buyers. Okay, looking for the sellers just above, and the time. Okay. Let me just dress this up. I still take the time and dress all this up, mainly to help train the eyes for you guys, okay? We took some fundamental information, which was outside the price chart, to anticipate a pullback. Okay. So we're currently looking at 42.03 half. We just hit that right on the quarter hour.
Order filled.
Imagine the timing of that. Okay. Right on the quarter hour, we're lined up right with that little supply. Okay, and we're getting a nice little pullback. Boy, the market's on fire today, huh? Happy birthday, Caitlin. All right, I'm gonna take profit on that one as a quick trade. Ooh, maybe not. Let's let that. Okay, just when I think not, let's grab it.
Order filled.
Sorry, little chicken on that. That was a nice little profit in a quick amount of time. Okay, I'm happy with that. If you want if you're going to stay in a little bit longer, use your Fibonacci price extensions. These are often a very good way to see it. Click once on the distal line to the drop, and then you come back up to the retest of the zone. Okay. That first target, and that's why I jumped, you have an 85% chance of hitting that 41.96 3/4. You have a 40% chance hitting that 4189. Okay. Now you have to keep in mind, sometimes I do jump out of these trades a little more quickly to show a profit. I'm trading live in front of you guys. Come on. You know, I want to be right. Let's get those greens on there. Okay. So taking a quick profit on those, perfectly fine. We are also looking at this to continue down. Okay. I went back out to the larger time frame for you guys to get a little picture of what's going on here. Okay. We have a beautiful zone right up here, 4,335. And as we kind of map out that support over the holiday and the weekend. Okay. I also want you guys to recognize the location of the sell territory and support. Okay. Now this is very key to understanding when we're going to see a change in trend. Notice that sell territory and support formed just above the resistance. And once it started breaking down into the dead space, we started to see a little bit more of that trend changing. Okay. And we also have other information below to help us, visualize where that potential profit is at. Okay. Price breaking the Globex low is going to take you right into that pocket of points. Right now, we're getting a little basing, probably for the next 10 minutes till we get to the top of the hour. Why do I say that? Well, look over here at IBM and Goldman Sachs. Right now, they're going opposite direction. That's when things are slowing down. Okay. Let's take a quick look at the cash value. Right now, we have 12 Dow stocks negative over 94 cents and 3 positive, leaving us with 9 negative. 9 times 2 would be 18. Cash equals negative 18. Futures are trading at negative 19. Okay. So the momentum has shifted. Not only did we use cash value to evaluate whether futures were overbought or oversold, we saw that IBM and Goldman Sachs were going the opposite directions. Another place and another reason here that, hey, I'm going to have to sit through this, or I can take my profits and wait for another entry. Okay. A lot of nuggets today. All right. Dow breaking out. If you got that, but I'm going to set my trade over here on the other side of that. What order? What do I have on the Dow here? Okay. Not sure why that was there. We're going to look to capture a bounce on this. Now, we're still expecting the gap fill on the Dow. Okay. Dow opened up inside the prior day's trading range, not outside. The gaps often fill the same day. So in order to get a move back up, I need price to drop into a zone. Okay. Now, this prep screen zone is right in the middle of that. Actually, it's in a really good location. Okay. And we got that consolidation. That's where that origin of that V-shaped reversal. And this takes us all the way back down to the area before the Jewish holiday and before the 3-day weekend. Okay, so this is a very valid place where hedges may be unwound. Okay, as they're getting into day 2 of the trading week. I want to capture that because if they're unwinding their hedge right around that area, this could be a nice trade back to the upside. Supply zone target 33,198 also has a nice little base. Took them all day to build that yesterday or over the weekend here. And that tail goes way up there. Okay, so we nice sell territory, zones in the right location. Okay, you made a lower high than the prior high. Nice breakout. That would be where we have some sellers left. Okay, potential sellers. So let's set this trade up. We are 8 minutes away from the 10 o'clock reversal. We still have Fed chairman speaking and coming out. We want to keep an eye on that. How's our wheat trade doing? Go wheat, go wheat. Who got the Wheaties, huh? Nice job on that. Oh, did I get out of gold too soon? But we did hit that first target. And going into the dead space. Okay. And there was another reason I kind of took my profits quickly. Okay. I noticed right here, I didn't quite have the leg base group of candles on this time frame here to take that breakout. So I took a little extra risk. Okay. You do really need that leg base group of candles to help you manage that risk on a trade. Okay. Especially if you're taking a breakout trade. Now we have made a higher low compared to the other one. So the zone we're looking for now. And studies. Let's see if we can find a zone in there. Now we're looking for that leg base group of candles. Yeah, my zone would have been too far away. And the risk would have been elevated. And I took a little extra risk on the trade. Trying to find it here. Okay, there you go. All right, so if we get a pullback, we have a leg base. And let's go back out to 20-minute. Okay, so we got the breakout. It did hit target 1. We have a leg base group of candles on a smaller time frame. If price comes back down, we'll look to go long. Now be careful with that long. And the reason why is this area. Isn't that looking like a dead space on a smaller time frame? Okay. So that zone, although it looks good and meets a lot of our criteria, is inside a dead space. Those can often fail. Okay, but in case you were looking at that, I just wanted to point that out. Okay, the dead space is really important to know when a zone is going to work and when a zone is going to fail. All right, we're still rocking it on rocking wheat. Okay. Okay, crude oil, nice little exit on that one. Gold, we just talked. Nat gas. All right, so let's take a quick look at nat gas. We do have the basic shape here. I have my stop in place at the low of the session. Okay. But what I mean by the basic shape, and I'm gonna drop this down to, let's try. Not very good. Is we did have our 3 touches. We got the breakout, and now we're looking for that little pullback. Okay. 277. Get down there. Okay. Notice where the large stack of orders are at, right about that 2.285. Okay. So that's right in the middle of the zone. So you may have a second shot at this. Get that picture right so that you know that there's banks and institutions participating in that. Okay. So a new entry on that. Should have grabbed my profit. All right. Right about that. Wherever I had that zone right there. 2.290. Okay. We'll keep a close eye on that. All right, looks like the S&P is now building up on our tick chart. We have multiple touches. Same picture over and over and over again. Okay. Multiple touches, looking for that breakdown. Okay. Now that we have a support and we have an above resistance, we have to keep in mind that this area right here, price going back up, is in a dead space. Okay. We're making lower highs as we get closer to that breakout. So I'm going to look for a short-term trade on that one. Taking it at 91. Actually, I'll leave that one on since we're doing a. And we're looking for the leg base, 195. Let's call it 196. And looking for that breakout. Now I need to know where we're going. Go back to my larger time frame, and we're looking at 4166. Okay, so on this trade, I'd like to stay a little bit longer if possible. But keep in mind, we don't very often get the big move from a breakout. We get smaller momentum type moves on a breakout portion of this. Okay. We get the longer running moves when price comes back to a supply or demand. Okay. So with expectations on this potential breakout trade. Okay, and this is what I'm looking to do. Okay, is looking for that short-term move down. And then price coming back up, we find a leg base group of candles. Then we would look for the longer running move. Okay. That's something that was really difficult for me to follow on, is
Order filled.
expectations of a big move on a breakout when, you know, often they were smaller. Okay. So that trade triggered. Okay. And we're looking for that potential target down here. And I do have a stop loss. Okay. Now, all of this that we have going on right here, okay, everything that you see me doing here and Caitlin putting together is taught. Okay, right now we're not doing a lot of teaching of this. We're just showing you the results of what you learn from the Mastering the Charts course. Okay, and the Mastering the Charts recap and review, you start taking a more deeper dive into some of the trades. Okay, there is a process of learning. Okay, we tell you how to do it, show you how to do it, and then you do it. Okay, so the Mastering the Charts course coming up is us telling you and showing you. Okay, showing you how to do it. I'm sorry, yeah, telling you. Okay, not the actual doing. The doing comes here while we're in the live trading room and following up in the Mastering the Charts review and recap. Okay, so I want to make that really clear, because many of you do not have that foundational course that we put out there, which is the Mastering the Charts. Okay, and once you have that, then you start seeing the picture a whole different way. Okay, so Caitlin already posted the link in the chat. Please get involved. Okay, you do get the recordings and a 1-month follow-up of the Mastering the Charts review and recap. If you're retaking that, then make sure you send a little email to the elitetrade@gmail.com for the retake cost. Okay. All right, so we got we're still doing okay on nat gas, but we're flat. Crude flat. Oh, are we going to take the long on gold now? Did it violate the zone? Did we expect it to violate the zone? Funny how that stuff works, isn't it? So the things that you're witnessing now, okay, if all you did was just take the course and learn about, you know, trades and when to take the trades and stuff, you might be confused. Well, why did you get stopped out on that? That's why the follow-up in the Mastering the Charts review and recap and the live trading room is we can explain why that zone may get overshot, may get violated, and is not often a great place for us to get in. Now, when price is inside the dead space, okay, price came back down, but I'm going to look at that breakout again in that area. Because breakout trades often work inside the dead space. Supply zones and demand zones often get violated and broken, okay, especially when they're in that dead space. Okay, 1983 and a half, one contract. And then we'll look for that target to the other side of the dead space. Okay. All right, S&P, we cracked the Globex low. We are not expecting a gap fill on the S&P. Okay, that was a nice little trade though. I left that on there because that was a smaller time frame picture. Now, often we get stuck on certain time frames that we follow, and we don't always get the same picture. Right? It's important that you adjust the time frame always to get the right exact picture. You know what I forgot to do this morning was, wait a minute, where's Chris? Chris with us today? Oh, we gotta find out where Chris G is at. She left us on our own today for crude oil. Oh, wait, that's tomorrow. No wonder. Never mind. Thanks, Liz. Caitlin did tell us that yesterday too, didn't she? So, all right, we're still in the S&P trade. Taking a little heat on it. Let's look over at the stocks. Now we have IBM and Goldman Sachs going the right direction. We have 12 Dow stocks negative, 3 positive, so we're getting a little bit oversold. Okay. So the risk is increasing on that short trade. Okay. Our risk is in play, we have a stop loss. Okay. And on this particular trade, we're taking 2 micros, we're risking $42.50. I could still lose money on this trade. Okay. Or I could hit the close button real quick and take it. Okay. My target is down here. Okay, my stop loss, my plan. Okay, at my right above that leg base scoop candles that was just before that breakout. Now we need to see the follow through. Okay. Is anybody participating in on this one? Kind of walked you through that one a little slow. Okay, how many are still eating their Wheaties? Wheaties. That could be a substantial move up. We got a pocket of points coming in there. Commodities have these little cycles as well. Okay. And see what else? Yeah, soybeans did get a nice bounce as well. Corn. No entry on corn. Bean oil. Yeah, bean oil did come back to that zone coming out of it. Okay. And not a great entry on that one. And we'll just keep riding the Wheatie truck here. There we go. All right, other trades that we do have. Oh, soybean meal. That was at 388. That one did trigger. Please always check the time frames on these. Okay, so soybean meal was on a daily chart. Price came down to that demand, 388, 80 cents, 380 and 90 cents, still right in that area. We still have a trade set up on copper to go short. And we'll see how that plays out here with gold. We're also looking after price broke out and came back down into that high tight base. Looking for that move back up above 1983.5. And we got a little pullback on the natural gas. Okay. Just looking for this trade to resume moving back up. All right, internals are getting a little bit more bullish. Okay. Now this is a good gauge to kind of watch. There's more upticks and up volume than downticks and down volume. But a lot of us are more bearish right now, looking for that move to continue lower. Okay. Or now what is actually happening in the market is there's a lot of upticks and up volume more than downticks and down volume. And we have the advancing issues of declining issues. So it looks bearish when you're looking at the tick, advancing issues over declining issues, and the VIX. But the trend is telling us a little different story. Okay. Which is going to keep me very cautious on this trade here, because now the S&P futures are becoming more oversold relative to cash. Okay. So the more that they become oversold, the higher potential, we're gonna get a bounce back up. Okay, so make sure you're managing your risk, managing your profits, okay? On your trades,
Order
because the
filled.
condition is changing. Hold on, we did have SN three. Oh, we had soybean meal, that's why. SMN 23. Yeah, that one's doing pretty good. Okay. Yeah, I did get into soybean meal. Okay. I'm expecting a much bigger move on some of these commodities, but this is getting up to that feel good area. We're right below a little pocket of points over here. Okay. Target initially about 395.80. Okay, what else do I have up there? S&P. Oh, we got back into gold. Okay. Got back into gold. And taking a little heat. Okay. All right, so watch the time. You got 3 minutes to the quarter hour. Wait a minute. I thought I had that trade set up. You take the breakout, Kate?
Order filled.
Dow hit our prep screen zone, actually. Yeah, there we go.
Yeah, I'm gonna give it a little risk. I may have to, if price does come back a little deeper. I'll take it as it starts to leave that area. But we're 2 minutes early. Actually, we're a couple minutes early, so. I'm looking for a bounce on this one. Let me explain. Sometimes Caitlin and I do things really with intuition. Okay, I mean, we intuitively know, but let me explain a couple of things. This zone over here is in the right location. Okay, we are expecting a gap fill. Okay. But also, we're just looking for a potential bounce on this one rather than a trend change. Okay. So I'm looking for like a 1-to-1 move. Price probably getting back up to that Globex high. Another reason, looking for a short-term trade, and why I have my risk smaller is what time did price hit that zone? Okay. Often when we see price hitting the zones around the quarter hour, we get a good, and I'm sorry, at the quarter hour, we can get a nice little bounce. Okay, but if it arrives in that zone earlier than the quarter hour, like it did, okay, I want the potential of the gap fill. I want the prep screen zone, but understanding that price got into that prep screen zone a few minutes early,
Order filled.
I need to manage my risk. Yes. Oh, we got, I'm not sure what I got filled on here. Oh, S&P looking beautiful. Okay, still looking for that, we got that breakout. Short the S&P, long the Dow. What the heck are we thinking? What the heck is the market thinking? NASDAQ approaching the low, so I am going to get out of this.
Order filled.
Understanding price did come into that prep screen zone. Now, the prep screen zone is a valid zone, okay? Great location, great setup, and great odds enhancer. But it arrived there early, and the other equity indexes are pulling back, okay? So Dow may be all on its own, that's okay. Okay, but the risk is involved in taking that trade or staying in it is much more elevated, okay? Okay, so in looking at a projected move, let's use some Fibonacci measurements here. I'm going to go from the low to high for the first move, and I'm going to project down. Is where I expect a strong bounce is going to be in either the 224, 2618, or 314. Okay. Down at those levels, and let's get the other ones on there. Let's get the 1618, 127. There we go. Watching the time. And I'm going to put a second set, which is just a little bit smaller swing there. And we can see that we have a confluence right there. Okay. Notice how price dipped into it, bounced out a little bit, and then continued. Okay, so each one of these little confluence areas, we're prepared either to take a profit or taking a bounce. Okay. If price can get below 4183, then we're looking for a nice pocket of points down to 4177. Okay. Using Fibonacci extensions and time. Okay. You may use this information here to add on to a potential trade or take a small profit, wait for the bounce, and potentially even bounce back up to your supply zone. Okay, or you could add on. Okay, so there's several opportunities when you start mapping out the right side of the chart. What are you going to look for? Okay, well, price breaks 4183.5. I'm looking at this nice pocket of points, a little drop down to that 4177. Now we did have a target from the larger time frame down at 4166, where we would be looking to go long. Okay. The breakout trades are not often the big trends. They're where we take smaller profits. Okay. So as price is holding on, I realize we have about another 12 minutes before the bottom of the hour. Okay. And if I'm liking my profits, then I could adjust my stop loss. We'll adjust that down to 4187. I'm starting to like it. Was the trend high? Are futures oversold relative to cash? 2 down, stocks up. 11 down. 9 times 2. Yeah, we're way oversold, right? Why am I thinking I want to take a profit or adjust my stop? Validate your reasons with some measurements. Okay. Validate your reasons why you want to adjust your stop and why you want to make those changes. Okay. So now that price did break that area, I'm looking for 4177, or I'll stop out at 4187. Okay. Crude, nothing after that move. Nice little open range breakout trade. Oof. And looks like I got whipsawed out of gold. Dang it. I could still go back in there, but I'm gonna wait. All right. Let's see. We're starting to see a little turn on the nat gas. We're watching copper, soybean meal. You're looking for wheat to consolidate and keep moving up. Whoa. Anybody get the breakout on the Russell? That's gone. We've got a prep screen zone down below. Nice job, Dingo. 1738, 1735. I'm gonna have to wait for those ones. 38 even. NASDAQ did fill the gap. Dow has not. Notice how Dow is deepening in. Now, do you remember what we just talked about on the Dow? Okay. We just talked about this on the Dow, that this zone is going to be elevated risk. Okay, due to the time it arrived at the zone. Okay, due to the time that it arrived at the zone. Let's see what here, large market cap stocks, what are they doing? I'm gonna change these on to a 5-minute. Which direction are most of these going? Using the last 5 to 10 candles as your reference. Okay. The other question you were asked, are the candles getting bigger or the candles getting smaller? After you identified the trend direction. Futures are a derivative instrument. They follow the cash product. Now, these top 10 stocks here control about 47% of how the NASDAQ moves. Okay. The NASDAQ futures. The NASDAQ is a market cap weighted index. The larger market cap stocks impact the index more than the smaller market cap stocks. Okay. This is why I kind of put this together here, is for us to get a good idea of, are all of them in the last 5 to 10 candles, are they pretty much going in the same direction? Then you start looking at, is price arriving at a demand or a supply and so on? If we have several of these approaching a demand zone, okay, we would have some really good information to use. We also can notice, based on this 5-minute chart, if you put a vertical line right at the peak, okay, you start to see that that vertical line, the high point on each one of them, lines up with about 10 o'clock. The NASDAQ futures, 85% of the time will change direction, plus or minus a couple of minutes, at 10 o'clock. Very high probability of prices arriving at a demand zone or a supply zone at 10 o'clock, and all of these are doing the same thing, you're going to get a good reversal. Okay. All right. All right, still looking for that next target, 4177. How many stayed in the S&P? How many have had your finger right on the close button for this whole time? All right, good job. All right, let me do a quick summary, then I'll pass the mic back over to Caitlin here. We're still looking for S&P 4166. We just looked at that one. We're in that trade. We're seeing that the Dow trade is going through that zone due to the time it arrived there. Okay. NASDAQ starting to pull back. We've got a lot of the stocks doing the same pullback. Russell, we have a trade looking for that. Now, if price hits this zone on the top, bottom, or quarter hour, okay, oops, we will be looking for an opportunity to go long, okay? Keeping in mind where the trend is at. Markets are dropping and the buying is getting stronger. Who has the money to buy when the markets are dropping? Except for Ellie. Okay, can't use Ellie. He's only on the Russell. All right, so just a little summary here. We're still watching for that V-shape reversal on wheat. Soybean meal, SMN23. Let's bring that one up. Soybean meal, we're also looking for that V-shape reversal. Target about 396 and 30 cents on that one. Did anybody get back into gold? That was a little aggressive on my part to go in that one. Crude oil and nat gas, I'm back at break even. Nice little trade setup. Price did come down to the zone. It's a perfect trade setup. Now we're looking for price to continue on up. S&P just hit target 2. Notice how it keeps bouncing on these Fibonacci levels. There are some traders that are looking at that. Since price did touch the lower that zone, I am now going to trail this down, and I'm doing this also because of the potential reversal at 1030. So I'm going to adjust down to 4180. 4181. Right. See, I want you to have very specific reasons why you adjust your stop loss. A lot of it has to do with the time of day in reason I'm adjusting my stop loss. Okay. I'm expecting a bounce on the quarter hour, especially if it's in a Fibonacci extension or in a zone. Okay. I would love to see it continue, but I have to realize that this breakout trade is not where the trend gets established. Okay. The breakout trade is a shorter term trade. Okay. So we'll see if we get stopped out or if we
Order filled.
took a profit right before the quarter hour. Okay. Nice job, everybody, on that one. And with that note, I'm going to send this back over to Miss Caitlin. Birthday girl. And we'll do a wrap up here. And then I'll see you guys over in the Mastering the Charts review and recap. So great day today.
Yeah, you said it, Jeff. Great trade setups, and I saw a lot of you guys taking some of those trades. So excellent job. Let's do our recap. So for the S&P, again, getting that continued move to the downside. Jeff did point out before that with the trend spiking up, the big banks and institutions are going to be jumping in and likely buying up the market as we are seeing this pullback. So keep an eye on some of our buy zones as the markets are pulling back. On the S&P, we have our 8-minute buy zone down at 4166.5 with our stop at 4155 0.25. Thank you guys. Thanks, Debbie, Callie. Cell zones, they're a little bit further away at this point, but again, keep an eye on the trend with the trend spiking up and reaching some of those extreme readings. We do want to keep an eye on our high volume buy zone. So the first one on the S&P being our 8-minute buy zone within our buy territory. Going over to the NASDAQ. Let's see, we're waiting for that breakout trade to the downside. So we did get that breakout. We're pushing lower. Made note of that speed bump just to the left-hand side. And then below that is where we'll get that pocket of points to the downside. Sell zone is still fresh, 14,516.5. Stop at 14,559.75. So at this point, since the breakout is already underway, wait for that pullback, rally up into a sell zone. We may have formed one just prior to this breakout. So keep an eye on that as the markets are pulling back. We are going to be rallying up into a sell zone or looking to stay in the NASDAQ as price moves through this pocket of points. To the downside, nearest buy zone, 13,892.75. Stop at 13,853. We're going to be keeping a close eye on that one, or for a pop back up into our 2-minute sell zone up at 14,516.5. Thank you, Ron. Going over to the Russell. Let's take a look. All right, so I left our 6-minute zone on just to show you guys how we had it tested once in the overnight session. Got a very nice move during today's session. Some of you guys got in on that. And then ultimately, after several tests of this buy zone, price broke out to the downside. So taking this one off the table, has already been tested several times. Zooming back out, our nearest buy zone is going to be the 6-minute one down at 1737.8. Stop at 1735.2. Sell zone up a little bit higher, up at 1808.3. Yeah, entry 1808.3, stop at 1810.8. Yeah, if you are going to be looking to take long trades, just keep an eye on the stocks, and the time of day is going to be helpful. We don't want to be necessarily picking bottoms if we are seeing these pretty extreme moves to the downside. Want a little bit more confirmation with the stocks, in addition to the trend reading being pretty high at this point. And then lastly, let's see how the Dow is doing. So Jeff did a great job explaining this one as far as how the time of day is a nice odds enhancer for these buy zones. We're getting a little bit of a bounce, but it really wasn't sustained to the upside with the other equity indexes pulling back. So we are pushing lower, may start to look for some of those breakout trades to the downside. I'm noticing just below that 8-minute buy zone. Looks like we also do have an area of tested support. Notice how price came down, tested support once, twice, 3, 4 times. So looking for that breakout trade to the downside, going to be below 32,724. 20-minute sell zone has been holding. So the nearest fresh zone going to be up much higher. It looks like 34,254. And then to the downside, we'll need to update our buy zone just since price currently is in this one. Let's see where our next buy zone is at on the Dow. Pretty far away. So a lot of areas of tested support. You notice price coming down. We're going to be approaching another tested support area. We may see a couple areas where we have zones within this consolidation, but just be cautious again with picking bottoms. The Dow has been in more of a downtrend. We've been making lower highs and lower lows over the past several days. So with that being said, nearest buy zone within a buy territory going to be 30,615. 10-minute leg base. Stop at 30,465. All right, yeah, again, just keep an eye on the Dow since we have been finding a lot of sellers coming in, pushing price down, and with this most recent trend being to the downside, taking out these support levels, the trend is going to continue to the downside, looking for those short breakout trades, as well as those pullbacks up into our high volume sell zones. Alrighty, so screenshot this. Only one we updated is going to be the Dow. Again, price currently in that zone. We'll see how that pans out, but time of day, huge odds enhancer for that buy zone. So just updated it based off of our new buy zone, which is going to be a little bit lower. Yes, and lastly, let's take a look at crude oil. Thank you, Callie. Yeah. Let's drop it down to the 1 hour. Got that nice move to the upside. A lot of you guys took the opening range breakout this morning. So price getting a pretty sustained move to the upside. I'd say just pay attention to this larger time frame sell territory that we have marked. So price rallying up, looking for some unfilled sell orders within our 20-minute sell zone within our sell territory. That's going to be 71.34. Stop at 72.07. If potentially the trend is going to continue back to the upside, making higher highs and higher lows, at that point, you may just want to assess this and see if it's trading with the trend or if it is going to be a counter trend trade at that point. We're getting that pretty big move to the upside. Just monitor this 20-minute sell zone as price does continue to move higher. Alrighty. Again, screenshot that. Jeff, anything else that you want to add before we wrap up today's session?
Keep in mind, the Wednesday, last week, Wednesday, Thursday is probably where the equity indexes want to pull back to. As we had a 3-day weekend, you guys are getting a very clear picture of the big banks and institutions unwinding their hedge. Got a big move up Wednesday to Friday, even into Sunday evening, Monday, okay? Now they're back at work. They've unwound the hedge on the top, and now they're waiting for price to come back down where they're willing to buy, okay? So you're seeing that. Don't lose sight of that type of information, because that unwinding hedges, we have the shorter term ones, which are just the regular weekends. Then when we have an extended weekend, okay, we have to anticipate they hedged before the weekend, often 1 to 3 days before, okay? So price often likes to come back down to those areas, and we need to keep a close eye on that, okay? The fact that the trend is high and the markets are dropping down is a clear indication of that, okay? And there was also a word from some of the Saudi last week said, if you're shorting crude oil, you're going to get burned, okay? Now, if you look at that chart Caitlin has up there, if you can see the drop out of that sell territory, that is also looking at the shape and the steepness of the slope, looks like a V-shaped reversal. Okay, so right where Caitlin has her 20-minute zone, we're looking for that 78.6% retracement back up into that area off of that bigger picture V-shaped reversal. And we also see that there's a nice little Elliott wave right down to that area. And now you're getting that corrective move back up. So happy birthday, Caitlin. Have a great day. And we'll see the rest of you guys over in the Mastering the Charts review and recap in about 50 minutes. Okay. Have a good day, everybody.
Thanks, Jeff. Have a great day, everyone. Bye-bye.